Good evening, everyone. My name is Henry Gamble with SimplerOptions.com. Stepping in today for John Carter. Typically he does the free video for Wednesdays, but I get to bring you guys a little bit more content, and today I'm going to step outside of the normal vein of what I'm showing for you and actually look at a bearish setup. Most of what I've been doing as of late has been a little bit more to the buy side because that's just what I focus on, and I try to find tickers that will remain resilient and fight the overall markets. That's what we've been trying to do with JD and several others in the chat room. But it's good to have bearish exposure as well, should the markets roll over. I think it's a much better decision to go in and look at individual tickers that are weak in and of themselves, rather than try to do something like picking up on spiders or the Qs just for a broad hedge. Try to find something that is weak in and of itself, and then play that to the downside as a hedge. I think LMT may fit that criteria. What we're looking at here is a daily squeeze that we've just got confirmed to the downside. So that's one factor that should continue to put pressure on this market. And then if you step back to the weekly, you can also see that this squeeze is starting to fire short. Now, one thing that you want to be very mindful of in these situations is that the weekly squeeze won't truly be confirmed until we get Friday's closing bar. Inside this week of action, it could still shift, and maybe it doesn't end up being a short signal on the weekly chart. But one thing that I like to use when I find myself in that situation to complement the analysis is remove your studies and just go back to clean price action. We'll kind of zoom this to where it's an easy angle to see. And the important thing about this move, or at least what I see in it, or what helps complement the squeeze to the downside, is that if you look at this for essentially the past year and a half, where we had all of 2013, all of 2014, and 2015, look how mild these pullbacks have been. This is the sharpest pullback you saw throughout that entire period, but other than that, the stock has been very aggressively bought and has continued to maintain a very bullish trend. What we're seeing in this current correction is that decline is a little bit healthier than all of these. So the structural integrity of the chart is starting to break down. Some people may argue a little bit of a topping pattern up here in this range, but I think those various things help push you into the downside. What I'll be looking at is doing a butterfly around the 185 strike in the June monthlies. Ideally, I get to take that off sometime around the middle of next week. Maybe it'll be sooner. If in a perfect world you kind of pause near these lows, giving you an opportunity to take it off. You could always do a more aggressive butterfly, place it a little closer to the 180 strike, and see if it can keep falling. I prefer the 185 because when I look at the June monthly options, I know that we only have an expected move of about $5, so I'm not going to try and get too carried away from our current price in relation to that. So I hope that helps, gives you some thoughts on how to position yourself for additional correction should we see it, and ideas on how to play a few things into expiration. You guys have a great rest of your evening, and I will see you at the next free video.